in what I believe is going to be a super cycle beyond super cycles. I can't even come up with a name of commodities again, because again, these are real things. The debt market sell-off is going to destroy, and I cannot underscore that word enough, destroy world stock markets as the multiple contraction cycle begins. I look at the Dow gold ratio, the gold silver ratio. Now we got to figure out where the bottom is on the Dow. Where is the bottom? We don't know where the bottom is. And my best guess is the bottom for the Dow is 8,000 in our current environment. The bottom is 8,000, and I would believe we're going to get a 1-to-1 ratio with gold. So 8,000 gold, and could be even a 10-to-1 with silver in a full-on, panic, or more likely 15-to-1. But so that's where this is going here.
Gregory Mannarino, often called the Robin Hood of Wall Street, is a former Wall Street insider. In this video, Gregory highlights how central banks' low interest rates devalue currencies, driving cash into riskier assets and inflating a stock market bubble. Regarding the anticipated debt market sell-off, he warns it will severely impact stock markets, shifting cash into commodities. Gregory emphasizes his focus on precious metals, particularly silver, predicting significant changes in asset values. Gold is inadvertently retaking center stage as the dollar's weakness results in a worldwide transition into safe haven assets. Countries turning their backs on the US dollar aren't taking another risk on a fiat currency. With a rapidly growing $35 trillion national debt, it's evident that even the most powerful economy in the world can't escape the shortcomings of paper money. That's precisely why central banks bought gold at record rates in 2022, 2023, and the first half of 2024. From a technical standpoint, Gregory Mannarino predicts the Dow could bottom around $8,000, potentially reaching a 1-to-1 ratio with gold at that level. He estimates gold could hit $8,000 and foresees silver ratios dropping to 10-to-1 or even 15-to-1 in a crisis. Since the Dow's inception in 1896, the markets have witnessed 3 peaks and valleys in the Dow-to-gold ratio. Each peak and valley has been an example of overexuberance in the markets, only to be squashed by reality. In every bull market, some investors have mentioned the good times are never going to end, but eventually they do. Based on economic factors, Gregory warns that the current situation may reflect the 2008 financial crisis, with credit markets potentially locking up again. He notes that central banks are often seen as saviors, evading accountability for their actions. Now, we present the clips of Gregory Mannarino's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
It all comes down to understanding how and why cash moves through the markets. And I'm not just talking about the stock markets. I'm talking about the debt market itself, currency markets, obviously commodities, gold, silver. And it's too easy. It really, really is. Now, let me just see, people don't understand this. When you have a mechanism of where central banks collectively keep rates artificially suppressed, and obviously that devalues the currency, this opens up a doorway for cash to make its way into risk assets here. And what this does is create what's called a multiples expansion cycle, meaning investors will pay virtually anything to own shares of stock, and this obviously inflates a massive stock market bubble, and creates distortions across the spectrum of asset classes. Cash coming out of things it should be going into, and vice versa. What's eventually going to happen here, and this is again no accident, it's absolutely deliberate. This debt hyper bubble is going to, when it bursts, is going to cause a multiples contraction cycle. So everyone's going to run to the door at the same time. Stock markets around the world are going to crater faster than anyone can possibly imagine. Now, the mechanism here of artificially suppressed rates has been working for many, many years. I've been telling people for years, buy the dips, buy the dips, buy the dips, riding this market. Me in particular, I'm an open book. Everyone knows what I'm buying, why I'm buying it, what I'm looking to do with regard to the stock market, taking advantage of it. As this multiples expansion cycle continues to go on, the faster the economy comes down, the higher the market's going to go until it doesn't. Now, there's no guesswork here. The debt market is the linchpin. We're going to get a massive sell-off here at one point here, and this is also deliberate. The central bank's buying it all and keeping rates suppressed here, creating this multiples expansion cycle again, and the debt bubble is going to burst with such ferocity. People aren't going to know what happened. And then, of course, we're going to get the multiples contraction cycle. People's investment plans are going to go up in smoke. But it goes way beyond that. It's not just a matter of the markets crashing. Forget about market crashes. I feel we're going to end up, and we're already in, a full-blown liquidity crisis. And the fact of the matter is that we can prove that by looking at the global economy contracting here in the United States and around the world at its fastest pace on record, and central banks continuing to inflate. At the same time, the system must be fueled, and that should worry people, because without more fuel, this whole thing will implode, and it will implode overnight. So understanding the mechanism here, look, when you have this multiples expansion cycle in the stock market, again, even though the market's right here at record highs again as the economy free falls, but that means that other assets are on sale. And based on, looking at global debt, it's commodities, of course, here. We're going to end up in what I believe is going to be a super cycle beyond super cycles. I can't even come up with a name of commodities again, because again, these are real things. The debt market sell-off is going to destroy, and I cannot underscore that word enough, destroy world stock markets as the multiple contraction cycle begins. Cash is just going to move. It doesn't grow money wings and fly away to money heaven. It's going to go into commodities in a massive way. Other suppressed assets, I also believe it's going to make its way into cryptocurrency as well. Only because of its market cap. It's so under-owned. But anyway, crypto is in for everybody. I get it. It's a very volatile asset class. But commodities are a no-brainer, man. You got to be in this stuff. My favorite asset has been, as you well know, and everyone who follows my work, is silver. I mean, I just look at this very, very simply. Again, there's no magic to this. I look at the Dow gold ratio, the gold silver ratio. Now we got to figure out where the bottom is on the Dow. Where is the bottom? We don't know where the bottom is. And my best guess is the bottom for the Dow is 8,000 in our current environment. The bottom is 8,000. And I would believe we're going to get a 1-to-1 ratio with gold. So 8,000 gold could be even a 10-to-1 with silver in a full-on, panic, or more likely 15-to-1. But so that's where this is going here. But that's not even the real issue. The real issue that we're going to face is what we were facing in '08, was a locking up of the credit markets. And again, this is why Bernanke was rushed in before Loving Caring representative said, hey, we have to pump billions into the system right now, or by Monday we're not going to have an economy. That's a quote. That's what he said. It wasn't about the market crash.
As November 5th approaches, Gregory Mannarino foresees a shift into an unpredictable economic system dominated by central banks. He criticizes both political parties for avoiding the core issue of central banks and their monetary policies, instead shifting blame among politicians. Global stock markets are expected to experience heightened volatility during voting hours on the 5th of November, potentially similar to the reaction seen during the Brexit referendum and the U.S. election in 2016. In the last U.S. election, markets sold off before Election Day, but recovered as Trump delivered his victory speech. History doesn't necessarily repeat itself, but recent movements have shown similarities. Moreover, Gregory argues that central banks have quietly dismantled the system for decades while most people remain unaware of these underlying forces. Let's get back to the interview.
I want people to just honestly think about what I'm about to say. Be ready for anything. I've been warning people for months now that after the selection date, November 5th, all bets are off across the board. I'm not just talking about this stinking stock market. Everything. I believe we are moving towards a whole new dynamic, a whole new paradigm, a whole new set of rules. And I've been telling people this for many, many years. There are some people that still believe in a dead system. This is not a republic. This is not a democracy. This has been taken over right now. Central banks run the entire show. It's not presidents, kings, queens, dictators, monarchs. The entire world has been taken over by central banks. That's it. They're the government. They make the rules. He or she who controls the cash controls the world. Man, we've been told this forever here. And it's just, look, it's very unfortunate to witness what's going on here. What we have here is an absolutely controlled society. Their minds have been taken over by the propaganda ministry. Look here. Don't look here. Deceptions, lies across the board. It just doesn't stop. People don't know what to think anymore, but just put all that aside, everyone. Look, you could sit here and we could focus on all these different things that are going on here under the table, on top, in your face and everywhere else. People can't see things that are in their face. So how are they supposed to see things that are kind of being conducted, in the dark? But the main thing is, look, just put all that aside here, honestly, and realize that society is controlled. We have been divided. We have been conquered. We can't come together on a single issue. We can't elicit change. We've done this to ourselves. Why? No accountability. I've been telling people for years, why is it that you can have this puppet say that and this puppet say this, and no one holds them to account? The media, the mainstream media outlets, same thing. You remember, you and me, when there was a time when the media was held to account for what they said, for what they put out, but there's nothing anymore. It's a controlled society. You have these people put over here, these people put over there. They can pull off whatever they want. And I want people to understand that the system, look, is being deconstructed piece by piece, methodically. This has been going on for decades. And central banks are the root cause, the source of everything that we're seeing right now. It's not the Bidens, nor the Trumps, nor the whoever's that are in control of a darn thing. Again, it's unfortunate that people can't break out of that. They're looking in the wrong places, and they're being deceived yet again. These same people. What gets to me here is, why is it, in anyone's opinion that's maybe smarter than me, which is probably everyone here that's listening, why is it there was not a single question during the presidential clown show debate, nor the vice presidential selection debate, whatever, about monetary policy, what the Fed is doing, why both puppets here are promising lower rates, which obviously means a weaker currency, and people are cheering for it? Not one question at all. And then again, it's the blame game. Well, it's Trump's fault why we have inflation. Well, it's Biden's fault. It's neither of them's fault. Neither one of them has a printing press. Neither one of these people have the ability to devalue the currency. It's the central bank. It's monetary policy. But people have been led to believe that's true. But again, neither party wants to point their finger at the root cause of the issue, which is, of course, central banks. And they're in control. It's astonishing to me how both the Republican Party, Democratic Party have to portray the Federal Reserve as being on the side of angels, because they're the ruling body. They're the ones that are being protected here by the deceptions, the distractions, by no finger pointing here. And we, the people of not just the United States, of the world, are being systematically wiped.
With growing global debt and countries shifting away from the US dollar, he foresees a significant rise in precious metals as a hedge against currency devaluation and financial instability. Investors are flocking to gold for inflation protection and to capitalize on its rising value. But gold isn't the only precious metal making waves. Silver has also seen impressive gains, with prices reaching $32 per ounce recently. Do you see gold and silver as reliable safeguards in an economy driven by central banks and mounting debt? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.